Okay, so this is just a really simple, quick video because I wanted to bring this to your attention. For those of you who follow me for some stock advice, I wanted to take a look at a Yahoo Finance story that you may or may not have missed. Some of this information is being repeated to me because I already knew about it, and one of them which I would plan on talking about. Uh, Okay, so anyway, these are a couple of IPOs that are coming up this week. One of the IPOs I have to say that I was watching was WOOF or Woof, and Woof was for Petco. And originally, I believe Woof had started at about $25 after its IPO had passed, and it's actually down to $20.99. It does not pay a dividend. I was kind of looking at it, but the thing about it is there's other things where I could put my money and I think I could get an immediate return. Has this year hasn't obviously been doing that great. And well, I mean it's down from, close to $30 down to about 20. So, if I had gotten in early, which I did not, I would have been down about $10 a share. But the thing about it is, I don't think it'll drop that much further. So over the long term, it might be a decent investment. But as far as some IPOs that they're talking about, Innovidge Holding, they're planning to raise 300 million through the sale of common stock to pay off long-term debt. So they have some debt, which is kind of a red flag. A lot of people wait until the IPO launch is passed, and usually people buy in, and then there's a sell-off, and then more investors come pouring in. But with some IPOs, the price just keeps on rising, so you really don't know. But I don't think many people are paying attention to these things. But basically, they're saying it's a healthcare company that offers affordable, personalized healthcare to elderly patients through Medicare and Medicaid. Well, basically, right now, the way that this country is set up, if you're elderly, they basically want to give you a reverse mortgage so that they can take your property from you and, take it back. The bank can take it back without giving it to your kids. Or if your kids do manage to get it, they're hit with a number of bills that they can't possibly hope to pay, and they end up losing that property. That actually happened to one of my neighbors on my old block. He had taken on like a mortgage or something after his wife died. He was in his old age. I think he was in his 80s. And then he died, and then his dumbass kids couldn't afford to take care of the place because they had done nothing but make poor financial decisions for a very long period of time. And naturally, getting old and dying in America is a very expensive proposition. So that didn't work out too well. Okay, so anyway, Oscar Health, a digital health insurance company that offers medical plans to families in the United States. They utilize technology to improve and humanize different healthcare techniques. Oscar Health intends to offer 31 million shares of stock at a target price between $32 and $34 on March 1st. Well, hey, that was today. So let's see how they're doing right now because they should have already launched. Okay, because today was March 1st. Okay, so I guess they haven't fully allowed the public to start buying in yet. Okay, so anyway, that's one to look into. It's a little expensive in my opinion. Roth CH Acquisition 3, a blank check company formed by Roth Capital that is seeking to raise 100 million in public offerings. The company intends to offer 10 million shares at a target price of $10 on March 1st. Okay, so that was another one that was basically today. Roth CH Acquisition 3 cooperates in the financial industry and is aiming to acquire another business through IPO offerings. Okay, blank check company. I don't know. You might want to do your research on this one. Let's see. DHB Capital Corp is a blank check company that is headquartered in Delaware. The company is seeking to raise $250 million from public offerings. DHB Capital is poised to offer $25 million shares at a price of $10 on March 2nd. They plan to target the financial and business industries. DHB Capital Corp was founded in 2020 and led by co-executive chairman Richard DeMartini. All right, so they're talking about $10 per share. This is a little bit cheaper, so it's easier to buy into if you have some spare cash laying around. The one that I was most interested in is this one right here, Roblox. Now, I have personally never played Roblox, but what I do know is that they've got a lot of children playing it. And what I understand is that these children playing video games, that is a
So I'm
very,
here with the
very
W220.
profitable, very profitable um, industry, because they've got these kids sitting behind these computer monitors playing these goddamn video games, and they're turning into little zombies. Because like it's sad because we were warned that children were going to start getting digital autism if they sat in front of computer screens and they didn't get enough human interaction and they didn't get out to play. They were going to end up basically getting what was called digital autism. And that was before coronavirus. Once coronavirus hit, all of a sudden everybody's sitting behind a damn computer screen, including myself, or they're on a cell phone, or they're on an iPad. Children seem to enjoy this, and if children are playing it and it appeals to kids, then that means that it is profitable, simply because there's so many kids and there's so many inept parents who have nothing to do to keep these kids busy except plop them in front of a video game. So, considering the number of views that all this Roblox stuff gets, chances are this is something you might want to consider, and I know I definitely am considering this. So they're saying RBLX is a video game company that is powered by a community of over 2 million developers. Roblox Corporation is well known for creating an it's kind of like, in my opinion, it's kind of like Minecraft, and we all know how much money Minecraft has made for Microsoft. Microsoft bought Minecraft, and Microsoft is, their shares are way up. But not just because of Minecraft, but because, other things. Like, they have Microsoft Flight Simulator, and they got Microsoft Office, and they got Microsoft Windows 10. You can't get around any of this stuff. It's everywhere. So the thing about it is, Roblox, of all of these things that I've looked at, Roblox is the one that I like the most. But unfortunately, the target price they're talking about is $45, which means by the time I'd be able to get in, it'd probably be closer to 50, if not more. But the way I see it is, Roblox is glowing places because hey, they got the children. They'll get your kids. If they got your kids, that's it. So that's basically it. And then we just take a quick look at some of the other IPOs that recently launched. Airbnb stock. Let's see where they are. Airbnb. $196, which is actually really incredible, because the thing about it is, Airbnb is not profitable. It hasn't been profitable. They've got a lot of millennials who are buying into these things, and that's the scary thing about it. You got a lot of millennials on Robinhood, just like with these Redditors, and they're paying into this stuff, and they're the ones who are putting all of these investments into companies that absolutely are not profitable. And it's actually really crazy, but that's just what it is. Um, they're also the same people who are still, with Reddit, still pumping money into GameStop. GameStop closed at like $120 today. Bottom line is, if you were one of those people who bought in above $300 when I first made the first video, chances are you lost money. A lot of people lost money. It's a damn shame that this is what stock trading has come to. Day traders typically aren't making money anymore. There's studies done that show that day traders aren't making money. In fact, I had posted something about it earlier. Day traders aren't making much money, and they've done some recent studies. And they were saying that the majority of day traders are not earning enough to consider it a job. Like, they're not earning like $30,000 or better. So they're living below the poverty line based on day trading alone. So for the most part, day trading is really like, it's really like it's like a side hustle. And they're talking. He thought day trading would be a thrill. He ended up losing $127,000. Oh, Robinhood, big surprise. I'm not surprised. But yeah, that's just what I wanted to talk about. I just wanted to talk about a couple of those IPOs, And as usual, I'll let you see how my day went. This was my day. I was up $508. I'm at $20,130 in the YouTube account. My other account is up higher, but this is the YouTube account. That's the one I share. I originally started this with $5,000. And let's see, where are those positions at? I've gotten paid a couple of my dividend stocks. I have paid off, and the day gain was best on the banks, obviously. Citibank, Apple, I had a $74 day gain, but I'm still down $55 from where I bought in. I'm not worried about it because, hey, it's Apple. If anything, a couple of years from now, they'll do another stock split. 10 will become 40 or whatever it is. I already own some Apple that got split because I bought Apple like 6 years ago, so it's no big deal. I don't even look at it, honestly. I just put money in Apple and trust them to sell $550 headphones to children in high school, and I just trust them to be profitable. I don't really think about it. And then there's Microsoft. I bought 10 shares of Microsoft. When I bought it, it started dropping, but naturally, a couple of days later, boom, it's up to $70 of total gain, and today it was up $46. Yeah, I mean, basically, I'm just sitting back here playing with the stocks. And what is this? ICBU. That's IMD companies. This was obviously one of the ones I told you to get into. It was one of those marijuana linked companies. I bought in at 0.0016. I got 10,000 shares. I'm up $40 today, so that's a total of $84, as you can see. But you know, basically, I'm up. So that's all that matters. I'm hoping that within the next couple of months I can get this number 20,000. I think I can get up to $25,000 worth of gain. I'm thinking. And keep in mind this was off a $5,000 initial investment. Now I just want to just say this: had I taken that $5,000 investment and I invested into Bitcoin at the time. Bitcoin back then was about 18 or less. I think it was actually like $15,000. But let me go for the benefit of doubt. If I had invested this shit into Bitcoin, that would have been $5,000 divided into $19,000, which would have been 0.263 Bitcoin, right? Right now, Bitcoin is, Bitcoin is Right now, Bitcoin is at 49,000. Okay, so 0.263 times 49,201. And that would have given me $12,947. So let's just do the math. With the $5,000, I don't know if you can see the calculator, but I just did the math for you and I called it out. So you could do the math yourself. It's the same. $5,000, even if I had invested at 19,000, that would have made me $12,947. However, invested my way, $5,000 has netted me $20,130. So you tell me which one makes more sense. The fact that I'm sitting down with dividend paying stocks in Apple, Microsoft, and a bunch of banks, because I've got Citibank, I've got Investors Bank Corp, I had like Bank of America, Wells Fargo, and then I have a bunch of oil companies like you can see S&M, Silica, and so forth and so on. So you tell me which one makes more sense. To be able to get paid dividends and still out earn what I would have earned with Bitcoin, or for me to have put $5,000 when it was $19,000 and have to wait for Bitcoin to double or triple in value in order for my money to be doubled. If I had put the money in Bitcoin at $19,000, it would obviously have to go up to $38,000, which ultimately it did, but that was only after Elon Musk and them poured money into it. But now, if I were to do that exact same thing, I would literally have to wait for the price of Bitcoin to go up to what? Eight? Wait, no. If it's at 49, I would have to wait for Bitcoin to go to damn near $90,000 in order to double my money. I'm not into doing things like that. I'm a Warren Buffett style investor. I'm not into the quick gains because I don't believe in quick gains. I am into buying long-term holds, dividend paying stocks. That's what I do. That's who I am.